professor at the Department of Finance at the University of Ghana Business School. Prof, always a pleasure. Good morning.
Good morning, Francis, and good morning to our listeners.
It's becoming clear that a number of businesses in Ghana are having to fold up or exit the Ghanaian market. Glovo being the latest, but the list goes back in the last 2 years. City Dia, Bet365, Dark and Lovely, Game Shopping, Jumia Food, Big Pen, Unilever relocating. Do you understand why we are seeing this exit of these brands and businesses from our economy?
Right. Good morning to our listeners once again. Yes, I can tell you for a fact that some of the companies you listed, apart from the parent company, they are multinationals. Apart from the parent company's policy or strategic business focus of moving out from Africa, I think there are some country-specific, should I say, traits that these companies look out for when they are prioritizing their exit, on the continent. I always say that if you want to know how the country is performing, let's look at, how people, look out for visas to travel outside the country, and then also look out for the businesses, looking out for exiting. If you take the multinationals, for instance, these are companies that come to operate and they bring in their dollars. Now, if it turns out that they are not certain, after their revenue has been generated in cities, they are not certain, how the exchange rate will behave. It puts pressure on them. And then also the cost of inputs that they use in, doing this business. So effectively, if your economy is not doing well, the signals and the things you look out for is how, the businesses unfold and then what goes away. I live closer to the West Coast Mall. And if you get in there, the number of, shops that were there, that were foreign, that has moved out for the past 3 years. I always tell, my friends that, look, things are not good on the ground, because if you really want to see the signals or the performance of a country, you may have to look at how the country attracts foreign direct investment, and then also immigration, how people tend to have opportunities to move out. The more, you get some of these numbers going up, then it tells you that, look, things are not good on the ground. So I'm not surprised, SSB is exiting, and Ghana is one of the countries that they prioritize to exit from on the continent, because the country-specific, indicators, that will make businesses comfortable and not, good at all.
When it comes to the indices or the conditions that will let a business be comfortable, what specifically are we looking at here? What will make them so uncomfortable to leave?
Now, exchange rate is one of them. Exchange rate is one of the main drivers, because look, this person is bringing in his dollars, and there's a parity such businesses look out for. They're looking out for, fine, I took money somewhere in America, I took money somewhere in the US, in the UK. The interest rate that is being charged, would they match up with the Ghana's interest rate, coupled with the expectations in interest in exchange rate? Because if you get your money, your revenue in cedis, and you have to change it back to dollars, how much are you going to change it for? Would you be able to, obtain or get the same dollars that, is required that you took from wherever you brought the money from? So exchange rate is one of the main things. If you're teaching international finance, it would tell you that businesses, will always fold up when they are not certain on exchange rate. Now, if you look at our exchange rate, you realize that we've been managing it with expectation. We don't have any concrete, inflows as far as dollars is concerned. We've not rolled out any policy that will substitute, the dollar demand in this country. So effectively, all the policies that we've been rolling out are temporal. So they are structural, problems. And if you're a business and you look at these things, obviously, the future will be uncertain for you. And these are risks that you may foresee because we talk about foreign exchange risk. And no business, no international business would like to be exposed to such risk. The ultimate will be to pass it on to the consumer in the country. But already we are talking about high inflation. So to what extent, will the price go to before the Ghanaian will be able to purchase those items that will be staying on the shelf? So it will turn out to be a problem. We'll be able to retain some of these Chinese, companies because they have categorized their production. And if you look at the things they produce for Africa, they look at the economy and the kind of, things that the people can purchase. And then the price levels to determine the input cost. So most of the things they will be sending us here will be inferior. At the end of the day, that is the way of, surviving in such environment. So from where I sit, exchange rate risk is one of the main indicators that these businesses may want to avoid. And then taxability risk. Because we have situations where, taxes are going up. You look at inconsistencies in our taxes. SSB may be moving out because if you look at, corporate tax, where was it at the time? It used to be 25. Sometimes some of the days, some of the years, fiscal years will move it to 30 and all those. All these inconsistencies will build up into, businesses, trying to move away from the continent.